something going on in this economy that I really don't like, nor should you, but you need to know what to do about it. So you best stay tuned. When markets go down, people fly to safety, don't they? Like the other day when the markets did go down 700 points, 200 points in the NASDAQ, didn't you go, oh my God, I need to sell, I need to get out, I need to lock in the profits that I have? That is a natural reaction that you should have, but you shouldn't be doing it, but at least it's a thought. However, many people follow through on that thought and they sell, even though they shouldn't sell. And that drives the market down even more. And then investors come in and sweep up what they've sold, and they make money, and those that sold lost money. But something else should happen when the economy is a little bit unstable, and when you're in war times, which I think we're in right now, and things are going a little bit iffy here and there. Here's what normally happens, especially on a big down day. People get out of stocks and they go into bonds because bonds are supposedly safe. Now, when you buy a bond, you cause the price of that bond to go up, especially if hundreds of thousands or millions of people are doing it. When the price of the bond goes up, the interest rate that's attached to that bond happens to go down, all right? Prices go up, bond interest rates go down. When prices go down, interest rates go up. Just that simple. But guess what? That did not happen, and it has not been happening. And that is cause for concern in the bond market, because rather than prices of bonds going up and interest rates going down, interest rates in bonds went up and up and up. Hey, you had a 30-year bond here for a little bit, over 5%. And that isn't what you want to see in normal markets. So that's the first thing that's like, what's going on here? Why is that happening? Next, when you see markets that are going down and things are unsettled, like we've been talking about for the past few seconds here, you then see also foreign money coming into the United States because they want their money safe. And supposedly there's nothing safer than the American greenback. So when that happens, our dollar gets stronger. And guess what? That didn't happen last week. In fact, the dollar that has been getting weaker and weaker and weaker. In fact, an example is if you're going from $1 to €1, just a few months ago, if you wanted to have an exchange, your dollar could have bought 1.02 of euros. They were almost in parity there. Today, your dollar would be worth less because it's 115 for €1. So you are paying almost 15% more to buy euros than you would have maybe 6 months ago, 8 months ago. That also is a sign that, wait a minute, something isn't going right. Now, what is it that isn't going right? Maybe it's that foreign countries don't quite have the faith in us anymore that they used to. We haven't exactly been nice to them. All kinds of things are going on with the tariffs right now. So maybe they just feel safer taking their money somewhere else. Something to think about. Same thing with bonds. So for those of you now who are looking for safety, you're looking for a good interest rate, you don't feel safe putting your money anywhere all of a sudden, you're afraid that treasuries are going to go belly up, which they are not, by the way, but you're afraid that they are. What should you be doing with your money? I'll tell you what I'm doing with my own money, and then you can decide what you want to do with yours. As I'm having a lot of my treasuries come due, which I am, rather than going back into treasuries, I'm taking that money and putting it into dividend-paying stocks. Because many dividend-paying stocks right now are paying more in a dividend than the Treasury is paying in interest rates, number one. Number two, I'm not exactly sure what's going to happen with interest rates and treasuries. It used to be if interest rates went down, the value of that treasury went up and I could sell and make money. I'm not sure that's going to happen anymore, everybody. However, in a dividend-paying stock, even if it goes down, if it's a good stock, if it has good cash flow, meaning there's enough cash to cover the dividend, so the dividend is secure, even if it goes down because the markets go down, if I dollar cost average into that stock, which means maybe I have $12,000 to invest, rather than putting $12,000 into it all at once, maybe I put $3,000 in. Then maybe a month or two from now, I put another $3,000 in, or whatever it is. As it goes down, my dollars buy more shares, and as it goes down, because the income is fixed in the dividend, my interest rate also goes up in there. And eventually, when things turn around and that stock starts to go up again, now I've made money in the stock and I've locked in a really nice dividend for myself. It is something that all of you should be thinking about. And you're like, really, Suze? Are there dividend-paying stocks out there that are paying me more than treasuries? Well, an example of one, and I'm not telling you to buy this, but an example of one is like Pfizer. Pfizer right now is at about $24 a share. Absolutely, it's been going down, but its dividend is at 7%. Now, is it possible that maybe they could cut the dividend? They're not going to get rid of the dividend, as far as I'm concerned, but even if they lowered it to 5%, you're still doing great. So I want you to start looking for good dividend-paying stocks or ETFs when you're looking for a place for safe money. Now, I know you're like, but Suze, you always say I shouldn't be in the stock market unless I have 5 years or longer till I need that money. If you're looking for income and you need that income and you know that the dividend-paying stock is safe, who cares if it goes down? Your dividend is still going to be paid to you. So it's something that I would tell you I would absolutely do if I were older and I needed income and I knew I wasn't going to touch that money because I needed the income. That's what I would be doing. Next, and it's something just to think about here. What about the overall stock market? What's happening there? Well, believe it or not, I have total belief that these markets are going to continue up without a shadow of a doubt. Now, I could be 100% wrong, but I also could be 100% right. But let's say I was 50% wrong. All right, if you have money to invest right now, only invest 50% of what you wanted to invest. And if I'm wrong, it goes down, invest the rest. However, there is an area of the stock market that I think is absolutely where you should be investing. And I want you to be investing in the future, not in the past anymore. Times are changing, everybody. Artificial intelligence has absolutely changed the face of money and the face of the future, and you have got to be invested in that arena. Now, maybe you don't know the individual stocks to buy. You don't know about NVIDIA or AMD or Palantir or any of those. However, let's just say you want true diversification, but you want to be involved in that arena. Okay, then you should be buying the ETFs by the symbol SMH and the QQQs. Those two ETFs, if you were to invest, especially if you were to dollar cost average into them, in the long run, I think they will make you far more money than anything else that you could be invested in. Now, that doesn't mean 100% of your money should be in there. Of course not. but you definitely have to have some portion of your money in there. Now, I'm going to say something that's a little bit out of sorts for Suze Orman, because I do believe in diversification. However, I also believe investing in the area that is more apt to move far more than any other area in the market. And that is the QQQs and the SMH and some of the stocks that I just mentioned. So I don't have a problem if you are overly invested in that area. Now, I do want you to be a little careful here, because I'm sure many of you noticed last week oil went up to like $75 a barrel, because now that Iran is fighting with Israel and who knows where it's going to go from here, could get a lot bigger, could end. We'll have to see where we go. Oil went up in value, which means that the oil stocks went up in value as well. I would not necessarily be investing a lot of money in oil. I don't think it's there to stay. I think possibly it went up because people are afraid right now of the shipping lanes, and are we going to get oil? Are we not? So whether you have Chevron or other oil stocks, okay, if you want, you can keep them, but don't go hog wild in oil. I just don't think it's going to stay. Bitcoin, as we've talked about before, did you notice that when everything went haywire, Bitcoin actually went down from almost $110,000 to $105,000 a Bitcoin? I still think, by the way, even though everybody thinks I've lost it, I think that money should be invested in Bitcoin, but money that you really have to be able to take a roller coaster ride with, and that if you did lose it, okay, because anything can happen there. But I think it's wise to have some money invested with Bitcoin. Now, I invest in Bitcoin through an ETF called IBIT, IBIT. Also, for those of you who don't want to be directly invested in Bitcoin, but you want a surrogate, a stock that reacts when Bitcoin reacts, there's a stock called Strategy, symbol MSTR, that reacts with Bitcoin. So you could do that as well. But I do think a lot of you, if you can afford to lose it, should have maybe 5% of your money in Bitcoin. Now, I know there are a lot of people out there that will argue and go, but Suze Orman, what? A little bit ago, I said I wanted all of you to be invested in the future, not in the past. Now, there is one thing about the past that's been interesting, and that's gold. Gold has been around forever. And I've been telling, at least on my Women in Money podcast, that all of you should be listening to as well. The subtitle is, and everybody's smart enough to listen. So that's every single one of you watching me right now should be listening there, because there I give more specific stock picks and things like that. I've been telling you I thought you should be invested in gold. The way I would be doing it is through the ETF GLD. And it's been doing very, very well for everybody. So it's just something, it wouldn't hurt you in times like this to also have a small exposure to gold. So overall, what I want you all to know is that I'm still a total believer in the stock market. I think it is very, very possible you could see the Standard & Poor's skyrocket. I am a total believer in dividend-paying stocks. And if you take me up on that, or if you already own dividend-paying stocks, it is essential that you are reinvesting those dividends unless you need the income to live on. Something you should think about. All right, that's it for now. But I will be back with another video as events unfold. Also, if you have a question for me, just write it below. Don't forget to subscribe to my YouTube channel. And hey, click that little bell so that you know when I do another video. All right, everybody. See you soon. Bye-bye.